Welcome back to the Deep Dive. Today we're taking you on a bit of a rapid journey. We want to get you truly well informed about the electrifying and, let's be honest, often unpredictable world of crypto.
Yeah, it definitely keeps you on your toes.
It does. You sent us a really interesting conversation from some top market experts recently, and we've been busy sifting through it, pulling out the most potent nuggets of knowledge and some pretty surprising insights. So our mission today, cut through all that digital noise, give you a clear picture of the current crypto landscape, and arm you with some strategic thoughts that'll really make you think.
That's the plan. We're not just going to rattle off prices. We're diving into what's actually driving the recent moves in the big coins, Solana, Ethereum, Bitcoin.
Right.
We'll look at how outside forces, things like the U.S. stock market, upcoming interest rate decisions, how they're playing a role. And we'll even uncover this powerful, maybe slightly controversial tool traders are using. Liquidation maps.
Ooh, okay. Liquidation maps. Sounds intense. So if you're curious about what's really going on behind the charts and, how the really savvy players are positioning themselves, then settle in. Let's unpack this deep dive.
Let's do it.
When we hear the word consolidation, for those of us watching the charts, it can sound a bit, dull. Bitcoin, Ethereum, they've been in this holding pattern.
Yeah.
But what does this quiet period actually tell us about the underlying market feeling? And are there surprising opportunities experts are spotting?
It's actually anything but dull, seriously.
Right.
While the broader market's been in this phase, it's almost like a spring coiling up. And one coin, Solana, SOL, it has really sprung forward.
I saw that jump.
Exactly. We've seen Solana show really remarkable strength. It jumped over, 4.41% in a single day, peaked near 5%.
Wow.
Now, the key insight here from the experts is this isn't just, everyday retail investors piling in, because Solana has a relatively lower circulating supply compared to Ethereum. It's actually much easier for the big players, the whales, the market makers, whatever you want to call them, to exert significant influence. They can push the price up more easily.
So less capital needed for a bigger impact.
Precisely. It changes the game dynamics for Solana compared to, say, Ethereum.
Okay, so Solana is definitely having its moment.
Yeah.
And that insight about whale activity, that's crucial. But what about Ethereum then? ETH is the second biggest, but it seems to be moving with a bit more hesitation. Is it just biding its time? Or is there something deeper going on with its consolidation?
That's a good question. Ethereum, ETH, yeah, it is consolidating. It's holding pretty firm around that 4,300 to 4,320 range. The expert consensus seems to be that it's mostly waiting for what they call a catch-up growth phase.
Catch-up growth, okay.
Yeah, or in Chinese financial circles, they call it SIR. It's where a major asset, after others have already run up, it finally makes its move. Think of it like Ethereum's waiting for Bitcoin, or maybe in this case Solana, to set the pace, and then it plans to follow suit. It's patiently building that momentum.
Got it. And then there's Bitcoin, the king, right? Consolidating for about 20 days now. And while that might sound like not much is happening, what's really significant apparently is that the selling pressure has noticeably dropped off during this time. But here's where it gets absolutely fascinating, what experts are calling the faith factor. We heard about this major whale selling a massive 97,000 Bitcoins recently.
Yeah, huge amount.
Huge. Now, in traditional markets, you'd expect a sell-off like that to just trigger a collapse, right?
Oh, absolutely. Game over, potentially.
Yet Bitcoin's price barely even registered a blip. How does that happen?
It's truly extraordinary, isn't it? That phenomenon really underscores this very strong underlying demand. And like one expert put it, the sheer faith investors have in Bitcoin. Yeah, it's not just about the technical charts here. It's about a deep, almost unshakable belief among a big chunk of the market. And this faith factor, it's a critical support, not just for Bitcoin itself, but it acts like this powerful foundation for the whole crypto ecosystem. It gives it a kind of resilience that you just don't see in the same way with traditional assets.
That is a powerful demonstration of its own internal strength. But even crypto isn't totally separate from everything else. How much of its movement is independent and how much is tied to, say, the broader economic picture, like the U.S. stock market? A lot of crypto traders seem to watch the NASDAQ constantly. What's that connection about?
That's a really insightful point. While fundamentally, there isn't a direct structural link between crypto and U.S. stocks, there's a very strong observed correlation in how their prices move. Often it's because the investor base overlaps quite a bit.
Same people investing in both.
Exactly. So if U.S. stocks are doing well, those investors feel confident, maybe they have extra capital, and they might allocate some of that to crypto. They see it as a related, maybe higher risk, higher reward opportunity.
Makes sense.
So yeah, we frequently see a strong U.S. market, especially a rising NASDAQ, often coming just before a Bitcoin rally, which then tends to pull the altcoins along with it. It's more about that shared investor sentiment and how capital flows between these markets rather than some direct economic dependency.
Okay, let's unpack this really intriguing concept you mentioned earlier, liquidation maps.
Yeah.
Sounds like something out of a financial thriller, honestly. What exactly are they? Why should we care?
Okay, imagine you had this secret map, right? Almost like a treasure map. But instead of pointing to gold, it shows you exactly where billions of dollars in leveraged crypto positions are basically set to explode.
Explode, like forced selling or buying.
Exactly. That's essentially what a liquidation map is. It's a visual chart showing price points where huge amounts of leveraged longs or shorts across the big exchanges, Binance, OKX, Bybit, would be automatically closed out, wiped out, zeroed out, they call it. And that triggers a cascade.
Wow, so these maps show where the market could suddenly make these really amplified moves because people are forced out of their positions.
Yeah.
Can you give us a concrete example? Like, how significant are these points for Bitcoin?
Absolutely. So, for instance, experts track this stuff closely. They say if Bitcoin's price were to climb up to, say, 113,479, over $1.076 billion in short positions would be automatically liquidated, forced buying.
$1 billion.
Just like that, just like that. And conversely, if it dropped down to 109,767, then about 1.392 billion in long positions would get wiped out, forced selling.
Okay, so why do these maps matter so much then? Is it just about knowing where the pain points are?
Well, that's part of it, but here's the really interesting and maybe controversial part. The hypothesis is that these powerful market makers, the ones with what traders call infinite bullets, basically incredibly deep pockets.
Right, almost limitless capital.
Exactly. They might strategically manipulate prices to trigger those liquidations on purpose.
Whoa, wait. They're trying to cause the liquidations.
That's the theory. They profit not just from the price moving in their favor, but also because they can simultaneously open a contract position in the direction they're pushing the price. So, for example, if they engineer a price drop to trigger long liquidations, they're also probably holding a big short position themselves, profiting from the drop they helped create, maybe even taking out the liquidated longs.
So they're not just predicting the market. They might be actively shaping it using these maps. That's a serious game changer for understanding how things move. How do regular traders or experts use these maps day to day?
Primarily, they're used as a validation tool. Let's say an expert predicts Ethereum will reach, 4,400. They'll then check the liquidation map. Does that 4,400 level line up with a high chip peak, which just means a big cluster of potential liquidations?
Oh, okay.
If it does, it sort of confirms that level's importance as a target. It suggests, okay, significant market action is likely here because of these forced closures. It's a way to cross-reference their prediction against where the concentrated liquidity or potential forced action is, makes it seem like a more probable target.
That's a really powerful look at the forces shaping the market. Okay, so for our listeners, the big question is, how do savvy traders turn these insights into actual action? What are the strategic plays, the specific price targets experts are watching right now? Let's start with Solana, since it's been so active.
Okay, Solana. Experts are watching the 221 level very closely. Now, this isn't necessarily an all-time high, but it's seen as a strong resistance point. The observation is, if Solana breaks and holds above 221, that's considered a key signal, a time to add to long positions.
Okay, break and hold above 221. What about nearer term?
Short term, the expectation for this month seems to be getting above 230. And here's where the midterm strategies get pretty aggressive. If Solana breaks above 230 and then consolidates, holds steady for maybe 2-3 hours, they're talking about a significant increase in position size, maybe up to 13,000 to 15,000 units now. That could mean the actual coins or a dollar value, depends on the trader.
Right.
One expert described this scenario pretty vividly, actually, where an initial 800 unit investment could potentially roll over, meaning use profits to increase the size into maybe 100,000 units if SOL gets to 260 without any major pullbacks.
Wow, that's rolling over profits aggressively. What about just long-term holding?
For long-term spot investment, the current prices around 208 are actually seen by some as a pretty good entry point, with potential, they think, to reach maybe 400, 600 down the line.
That's some serious potential being talked about for Solana. Okay, what about Ethereum, the one that's been patiently waiting? What are the key levels and strategies there?
Right, Ethereum. The key breakout level everyone's watching is 4480. If ETH can get above 4,500 and hold it, the general expectation is it'll climb past 4,600, maybe even this week.
Okay, 4480, then 4600.
Yeah. And if it moves past 4,600, that's where experts suggest traders might get aggressive, maybe increasing positions by 3 to 5 times. They'd be aiming for a 5,000 target.
5,000, okay.
Yeah.
Any warnings with that?
Yes, absolutely. A crucial cautionary note that came up is think about reducing your position size around 4,900 just to mitigate the risk of a sharp pullback, Then maybe plan to get back in later if it holds.
All right, risk management.
Definitely. That 4,900 plus level, it's near the historical highs, so it's a major hurdle. If it breaks through that, 5,000 becomes the next target. But they expect it might be a sharp dip right after hitting it, followed by a quick recovery. The advice often heard is maybe sell 50-70% right at 5,000, take some profits, and then add back if the momentum keeps up.
Okay, strategic profit taking and long-term for ETH.
The long-term outlook, based on these expert views, seems to place Ethereum somewhere between 6,000 and 7,000 by the end of the year.
All right, this next one you mentioned, it sounds truly wild. A long position on an altcoin described as a big blood dog, which I take to mean super volatile, maybe shady.
Yeah, basically. Highly volatile, speculative, prone to these crazy pumps and dumps.
And this specific one is actually facing delisting from the OE exchange on September 12th. Why on earth would anyone bet on it going up? It sounds like financial suicide.
You're absolutely right. It sounds completely counterintuitive, and it really is a contrarian trait. It's rooted deeply in that market maker hypothesis we talked about earlier.
Okay.
So think about it. Retail investors, normal folks, they see a delisting announcement. What do? They short it, right? Expecting the price to collapse.
Makes sense.
But the market makers operate differently. Their cost basis, their entry price on this specific coin is apparently around 0.08. So the rationale, the theory, is that these deep-pocketed players might strategically push the price up just before delisting. Why? To liquidate all those retail shorts, to squeeze them out.
Wow, they'd pump it just to trigger the short stop losses or margin calls.
That's the play. They're essentially betting against the predictable retail reaction. The target price here, they mentioned, is 0.09. Now, from its current price of maybe 0.05, 0.06, that's a potential 40% gain. And this coin apparently has a history of these rapid pumps, like 21% in 15 minutes was mentioned.
Crazy.
So the strategy is get in, hope for that short squeeze pump driven by the market makers, and then get out before the September 12th delisting happens. It's pure tactical maneuvering, high risk, high reward, playing against the crowd.
That is fascinating and, nerve-wracking, but it shows how these guys might exploit common assumptions.
Okay, let's zoom out a bit. What does all this mean for the bigger economic picture? We keep hearing about potential interest rate cuts from the Fed. How is that expected to ripple through crypto?
Yeah, the rate cuts. The general expectation among the experts we looked at is for a 25 basis point cut. That's 0.25% probably in September.
Okay.
Then maybe another 25 basis points between November and January. So 50 BPCs, 0.5% total this year.
Okay. And the impact? Well, the announcement of a rate cut usually triggers a short-term rally. Like Bitcoin might see a quick jump to maybe 117,000, 118,000.
Nice little pump.
Exactly. However, and this is crucial, the market has largely priced in these cuts already. Everyone expects them.
So the effect is already kind of built into the current price.
Pretty much, which means the actual long-term impact after the cut happens might be less dramatic than that initial news-driven surge. The real major negative scenario, the thing to really watch out for, would be if the Fed doesn't cut rates this month, going against those expectations.
That would be a shock.
That could have a really significant negative impact on Bitcoin and probably the wider crypto market. That's the real risk event tied to the Fed right now.
Okay, so the anticipation might be stronger than the actual event, unless the event is a surprise negative. Got it. So given all these factors, the consolidation, the potential rate cuts, the whale activity,
Right.
What are the expert year-end predictions looking like for the big coins?
All right, year-end targets. Based on the insights we gathered, Bitcoin. They're projecting it to reach around 150,000.
150K for Bitcoin. Wow.
Yeah, and with Bitcoin at that level, the prediction for Ethereum follows that it would likely be in the 6,000 to 7,000 range.
Okay.
And Solana, even though it's had this impressive run lately, it's still seen as having significant upside. The minimum target mentioned for year-end was 260. That's attributed to its strong fundamentals, plus that relatively low circulation we talked about, which makes it easier for those big players to push it higher.
Interesting. Beyond the big three, any other altcoins that experts are recommending people keep an eye on, especially for maybe longer term potential?
Absolutely. BNB, Binance Coin, came up highly recommended. Strong fundamentals, lots of potential. Predictions were in the range of $1,000 to $1,600 plus within maybe 6 to 12 months.
1,000 to 1,600 for BNB.
Yeah, some even suggested it could potentially outperform Solana over that kind of time frame.
Interesting. Anyone else?
Then there's OKB, the OKX exchange coin. Now, while it is an exchange coin like BNB, the view is that it behaves more like a highly volatile altcoin, less conviction on its steady long-term direction.
So more unpredictable.
Yeah, capable of swinging significantly. Some experts apparently treat it more like just another altcoin in terms of trading strategy, making it perhaps a more speculative bet compared to BNB.
Okay, that makes sense. This sounds like a lot of moving parts. And executing some of these strategies requires incredibly precise timing. It feels overwhelming for, the average person trying to navigate this landscape.
Yeah.
What's the biggest pitfall people should avoid?
That is probably the most important question, really. We and the experts we consulted strongly discourage short-term or day trading.
Yeah, why is that?
Well, the extreme volatility in crypto, it's just brutal. Combine that with the emotional roller coaster of chasing daily swings, it makes it incredibly difficult to stay profitable consistently, especially for the average person.
You win some, you lose some.
Right. But even if you manage to win, say, 7 out of 10 trades, those 3 losses can easily wipe out all your gains. Or worse, put you deep in the red. It's just so easy to get wrecked.
So what's the alternative then?
A key insight that came through is embracing what's called a rollover strategy. Think of it this way. Instead of constantly throwing more money at trades that are going down, averaging down into a losing position,
which feels tempting sometimes.
It does. But instead, you strategically add to your winning positions. You use the profits from a winning trade to increase the size of that trade. Let your winners run and compound.
Ride the winners, cut the losers.
Exactly. Ride the larger trend. Don't do that bottomless averaging down on losers. The focus should be on identifying those bigger proven trends and patiently riding them. That seems to be the key to long-term success and avoiding those really common, devastating mistakes.
What an incredible deep dive that was. We've really covered a lot of ground. From Solana's surprising rally and that whole faith factor keeping Bitcoin strong, to the complex dance between U.S. stocks and crypto, and those fascinating, slightly scary liquidation maps.
Yeah, they definitely add another layer to understanding things.
For sure. We explored detailed price targets for the majors, even looked at how these big interest rate decisions might play out.
It really all boils down to understanding how interconnected these markets are, and then approaching them with a clear head, a disciplined strategy, not just reacting emotionally to every little up and down tick. Knowing why things are moving is crucial for making informed choices and hopefully for long-term success.
Absolutely. Couldn't agree more. And as we wrap up, here's maybe a thought for you, our listeners, to mull over. Given this current market consolidation and Bitcoin's growing resilience we discussed, how might these economic factors that are supposedly priced in, how might they really shift investor sentiment when they actually happen? And what kind of unexpected opportunities or maybe challenges could pop up for specific altcoins like BNB, which is so tied to its own exchange ecosystem?
Good question to ponder.
Something to think about. Thank you so much for joining us on this deep dive. Until next time, keep digging for knowledge.